Good morning or good afternoon. Happy Friday, everybody. Very slow day so far. Volume's only at 28%. Pitiful. So has been the price action. Hey, Shannon, Jolene, Mark, Glenn, Catherine, Amy, good morning. Hey, Glenn, Richard, Dennis, Javad, Doris, Tammy, Omar. We will be getting started in just a few minutes. Do we have anybody on YouTube? Let me see. Well, let me stop this. Get over to YouTube. Yeah, I've got Fazio, Keith, Richard, Edward, Kevin, Jody. Hope all of you are doing well. Thanks. Hey, Darren, Gene, good morning. Matt, or good afternoon. Stacy, John, W. Moore's here. Ivano. Yes, it did. Yes, it did, Roger. Roger is on the way. Looks like hopefully the market's on the way down. Gold is breaking down pretty hard right now.
There we go. Hey, Matt, fancy seeing you here.
I know.
Let me turn on the. Good, good, good. Did you guys take a profit on AVGO and weekly cash flow today? Let me turn on YouTube while we get ready. And did you guys make money on Palantir and Nvidia this week in the pit? And are you guys making money on those bonus trades, the CNC bonus trades that I've been giving you? Hey, Keith. Hey, C. Fazio. Hey, Richard, Edward, Kevin, Jody, Steve, Naples fan, Mitch. Hope you guys are doing well. Now let me go to Zoom. $24 on AVGO, Palantir. How about NVIDIA? Don't hold out on me now. That's a weekly cash flow trade, by the way, and I'll show you how that trade came about. Check again TSM for me, Matt, per our conversation previously. All right. Anybody made money on NVIDIA? Anybody made money on CNC? Any of those? I guess the room is still pretty light. We'll give it a little time. All right. Tony says, beautiful profits, NVIDIA and Trading Zone Live. Good, 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 good. Let me repost that. I'll repost that, Tony. Very, very nice. Very, very, very nice. Matt, go ahead and repost that in.
Already did.
All right. All right. All right. Hopefully everybody's doing great today. Let me just go and say hello to everybody. Genevieve says yes. William says good afternoon. Manuel says hippie hooray Palantir. Mike, Tim, Robert, Brian. Hey, Brian. We got William. We got Mike. We got Tim. We got Robert. We got Nestor. We got Joel. We got Marty. Hopium 24%. Matt, nice comeback. Robert, Palantir. Good afternoon. David, the short answer is you don't. You just.
That was
Oh,
somebody else
okay.
answered a question.
Sorry, that's you there. Kevin, Ellen, William, Genevieve, Richard. Hey, Richard. David, Kevin, Sean. See, so you used to get blown. See, the pub was blowing up Roger on the advertisement. Oh, okay. Oh, happy Friday, everybody. Jill, good afternoon. Or, yeah, it is good afternoon now. Robert, Omar, SB, Ellen, David. Got a lot of people here. I love it. I love it. Love it, love it, love it. Good, 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 good. Let's see. $3,000, made a little on Nvidia, made 3,000 on Palantir. Listen, Nvidia's, I mean, it's not that bad. We held it for like less than 24 hours. Actually, like 12, like 15 hours. Good morning, Palantir, CNC, Nvidia, Okla was stellar week. You're welcome, Frank. Go ahead and grab that too, Matt. All right. Oh, Mitch, Nvidia. All right. All right. Listen, uh, it's been a good week. We didn't do a lot this week, but what we did do played out really cleanly. I will say that. Um, okay, so I want to give you guys a lesson. I'm going to give you guys a really good lesson. Now, if you guys have been with me for some time, okay, I'm going to just share my screen for now. Not that I'm just going to put the spy there real quick, or maybe watch a stock or two. Hey, Catherine, good to see you. Kirk, how are you? I gotta say, this Friday, I'm sometimes Fridays I'm mellow, but this Friday I'm pretty done. Milton, welcome, 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 welcome. All right, that I really like the stock Dell right now, and I'm looking at it. Made $6,900 yesterday with no losers. Yay! What did you trade, Kevin? What program were you trading? Kurt says since Market Geeks. Wow, that was a long time ago. You know, that's like 8 years ago, Kurt. Long time ago. Let me know what you were. I'm just curious, Kevin. You don't have to if you don't want to. But, I'm just curious. I'm sure others are too. All right. So I'm going to tell you guys a little story. I love sharing stories. And this is a good story. And I hope you guys listen to the story really, really good. Okay. The divergence between the Vold and the Spy is, oh, that's Will Ray. I thought that was Kevin. Is driving me crazy. Me too, Will Wild Ranger, and Matt too. Matt is sitting there on that trading zone trade, and he's like, because the thing is this. Here's the dilemma. So we went short around here. We should have just got out of it here with a little baby profit, but hindsight is 2020. But the thing is, we got a lot of resistance in this area right here. So the odds are, if we don't break this area, if we just continue consolidating, especially with the Volt going down, the ADD flat, the odds are we'll come back down. But if we bolt through it, what we have in our advantage is the range is really small right now, and Matt got a really good entry on this price. He didn't get in like over here; he got in around here, so we got a little wiggle room. Anyways, my quick and Matt, did I say anything that's against your plan on this trade? Okay, just see, we didn't talk about it, but I know we're saying the same thing. Marty, I got in 23% on Dell this morning. Yeah, I've been harping up Dell all morning. I mean, all week. I've been, I don't know why I didn't get into Dell, but I'm going to tell you, one of the reasons I have Dell on my screen is because if I don't, I should have an alert at the VWAP. Let's see. Let's see if I do. Right there. Do I know my see? I practice what I preach. If I tell you guys something, I'm not messing around. Okay. IBM that I'm looking for a gap to green on IBM. I don't know what I'm looking at gap here for. I don't even remember anymore. I'm gonna delete that. And TRP, yeah, that actually is very interesting. Let me take a look at TRP real quick. Now this is the wrong stock. TRP. What was Coach? Remember Coach? TPR, right? TPR. That's the stock. That's the stock. Okay. Yeah, that's the stock. TPR. Okay, it hasn't passed yet. Yes, I want it very much. Okay. Okay. So be careful here, Matt.
Yeah.
Yeah. All right. Okay. So let me share the story with you. And folks, I'm telling you, please listen to my words, okay? Please listen to my words here. This is really important stuff. Um, that's what I was taught, that price move right there. Now it's either going to continue or it's just going to fall right there, cleared out those stops, and it's just going to continue going down. It's one of the two. But Volt keeps going down. All right. So back when I was a hungry, eager beaver, you know that when when you first get your trading bug, okay, and you're you're drinking from a water hose. It's everywhere. And this is when I was really young. I was, I think, 24 years old, 23, 24, 20, early to mid 20s. And my mind was still very, very, I was really extremely focused back then. Not that I'm not now, but I was, hey, Vladimir, but I was, I was extremely disciplined. Like I could go read a book for 12 hours a day and do all that stuff, but you don't need to hear that. So I I went to the bookstore. Everybody, the best education was in bookstores because that's the only, there was no internet. So the only place you can get stuff is at the bookstore. So I went in and I saw this big book, and you always think bigger's better. The bigger the book, the guy must be brilliant. And if I learn everything in this book, me absorbing this book is gonna equal me becoming a options guru. In my mind, in my mind. So I went and I got options as a strategic investment. Okay, by William O'Neill. This is what the cover looked like back when I bought it. This is the third edition. I probably got I don't even know what edition it was on, but it looked like this back then. Now, thank you, Marlon. Good to hear that. Now, this book is about this thick. Matter of fact, let's see how many pages it is. Here, Amazon. Options as a strategic investment. And if you ask anybody, they will tell you this is considered the Bible of options, okay? And he's a very smart guy. He knows exactly what he's talking about, and he was ahead of the curve. And I'm not trying to sell you this book. That's not the point. I just wanted to see really quickly how many pages it's now. Oh, it's only 1,072 pages. I'm sorry. I thought it was like 700 pages. Be careful here, Matt. And when was it first published? No, not 2012. This edition was published in 2012. This thing goes back to the 90s. Uh, Maybe even earlier. Yeah, Clyde reads it every night for his bedtime reading. But and I don't even know what edition it's in right now. But this is like the Bible. If you're a professional trader, the odds are you have or had this on your. It's the fifth edition. They come out with a new edition like every 15 years or something. Okay. So I literally started reading this book, and I'm telling you, this is a good story. There's a lot to learn in this story. Okay. So I started reading the book, and there was something in this book that really stuck out at me. He was talking about implied volatility. There was a whole section on it, but he talked about the math, this, that. And he said, thanks, Kevin. You want to, sell options that have high implied volatility, and you want to buy options that have low implied volatility. I was like, that makes sense, right? I mean, that actually makes sense. Because options that have high implied volatility they're meaty. They have meat on the bones, right? And options that have low implied volatility, you're taking risk for nothing. So it made sense. It made sense. And I'm one of those people where you could tell me whatever you want, but till it makes sense in my head, it's not gonna move the needle for me, right? It's got to make sense. It's got to make perfect sense. I have to have that. Oh my God, of course, yes. How could it be any other way? So what did I do? I'll tell you exactly what I did. I went to the bookstand. I went to Van Nuys and corner of Victory and Van Nuys. For anybody who lives in LA, there was a newsstand back there in Van Nuys back in the day, and I got a newspaper and I got Investors Business Daily, and I went at like 10 o'clock at night every night, maybe 9 o'clock every night, because the next day's issue would be delivered at that time. Hey, Esther. So I remember this. I was doing this like 3, 4 days a week. So the beautiful thing about Investors Business Daily is you could flip the back cover, okay? And if you look on the back, it will tell you for that day the most heavy for every ticker that had the most extremely expensive options. So I was like, "Hey, this is great. Not only am I going to get what I need ahead of time, ahead of everybody, because most people get it delivered. They're going to get it at like 8 o'clock in the morning tomorrow, or 7 o'clock in the morning. Market opens at 6:30 in the morning in LA. This is when I lived in LA. So to continue my story, so I went home and I took a highlighter and I literally highlighted every option that was just grossly overvalued, really expensive options. And guess what I did the next day? I went into my account and I did a bunch of income trades. Some naked too. The requirements were very different back then for naked. They weren't as stringent as they are right now. So I did some trades, and guess what happened to me? Does anybody want to take a guess what happened to me? I followed exactly his advice. Because you lost lots, lost your ass, lost money, got a margin call, blew account, got burned, lost. All of that, all of the above, all of the above, all of the above. One of those stocks, I don't even know if they're still in business. Rewrite. I don't even know what they do, but I remember Rewrite. And this was my second year of law school, so it must have been 95, somewhere around there. And it was so painful. It was so painful. But I learned something very, very, very important. I learned something really, really, really important during that day. Send me an email, Esther. I remembered something really, really important that day, and I learned something really important that day. Just because you read something doesn't make it true. Okay? When he wrote the original book back, God only knows when, there was barely any computerized trading. There was nobody was using option models. And this guy's old. He's old. I don't even know if he's still alive. He's old. He was old back then. This is 30 years later, okay? 1980. Thank you, Robert. Thank you. So, and I'm going to promise you something. The edition I had was probably original. I don't even know. I'm taking a guess. 80, 88, 89, 90. Well, back then, what percentage of traders do you think were using option pricing models? Hardly any. So back in that day, if you knew what you were talking about, if you had any experience at all, you can theoretically make money on buying expensive options, selling expensive options. Once the 90s came, especially mid 90s, that ship had sailed so far away. And what I actually learned was if an option is now, let's move to now, but nothing really changed at all. Actually, nothing changed from mid 90s to now. One of the things that I learned that was really, really important was if an option's expensive, there's usually a really good reason why it's expensive. The last thing you want to do is sell over expensive options. Okay? That's the last thing you want to do. You want to focus, you want to sell options, or you want to do credit spreads on when everything lines up. When everything lines up. So, books are extremely dangerous, especially when they're not updated. Cheap options are usually the best options to sell, but they have no premium. Expensive options are usually really good options to buy. 80% of the options that I buy in the PID or any of the other programs are expensive options. Tech options like mega cap options, they're always expensive options. So A little information is an option expensive. Yes, high implied volatility. Option William, I'm talking about no, not William O'Neill. I'm talking about this guy, McMillan. McMillan, the guy who wrote Options as a Strategic Investment. McMillan. This guy, Larry McMillan. Let's see. Let's see what old Larry's doing. Larry McMillan. Take a picture image of him. See how old he is now. This is what he looked like back then, okay? I mean, this is when I was 25 years old. So to me, this guy looked old. That's what he looked like back. Okay, here he is. All right, 3 days ago. All right, so he's still around. Okay. Jeez, he's up there. All right. But again, this is when I was in my early to mid 20s. This is what he looked like. So I imagine now 30 years later. Anyway, you guys all get the point. Point is this: don't waste time reading something just because somebody said so and they're a professional trader. Yeah, he's alive. Yeah. Hey, Michael, how are you? Don't just believe something that you read just because somebody said so and somebody wrote a book and they have credentials. Make sure you test it or somebody tests it for you, preferably with real money. These analysts, these folks, a lot of them don't know what they're talking about. Now, the best way, in my opinion, to make money from income is to actually fly close to the sun. I showed you this yesterday. So, in other words, there was one particular example that I really like. What was that? TSM, right, Matt? So I really like this stock, but Matt says the options are too expensive. Marty says I'm out of Dell, 31%. You're welcome.
No, the
You're welcome.
spread was bad.
The spread was bad. Yeah, well, let me take a look. Remember what I said, one of the most important things that you need for these trades that we do yesterday, right, is they don't trade with their money. They just get exactly, Venkat, exactly. Is you need a real tight spread. So let's just see what we're talking. Yeah, 15 cents is a little too much. Yeah, 10, 15. See, this is okay right here.
Those are all calls. We're looking at puts.
I'm just looking at options liquidity. I'm not really looking at anything right now. But yeah, let's take a look at. Yeah. About 15 cents. Yeah, you want to try to limit yourself to about 5, 7 cents, not 15 cents. He's right. This is now if you're this is what I was talking about yesterday, and this is what I was trying to teach you guys yesterday. If I was buying an option, just buying an option, this liquidity would be fine. But because I have two sides, I have to subject two sides to this. You got stopped out?
Yeah.
I don't blame you.
Still going down though.
Yeah, Volta's still going down, yeah. That's a good point. Well, you can always get back in with a better entry. You know?
Yep.
How do you know when it's good when it's expensive just by ATR? You mean the option? No, you compare. Every brokerage has the historic volatility. It's a good question, Bev. Every brokerage platform has the historic volatility of an option versus the implied volatility of the option. The historic volatility, yeah, Glenn, I painfully see that. The historic volatility of an option, right? The historic volatility is what the usual volatility for that option is. And that's similar, and that's similar to this. Let's see one. Let's see if it's overextended. I don't know if you guys saw the lesson I gave on stocks, whether they're overextended or not. Like, what's a stock that's give me a stock that's really overextended. This is a good one. So okay, perfect. Okay, you see this going up and down, up and down, up and down. You see the low end right here. So historic volatility would say, hey, the stock's this is the stock, but the option would be very similar. Say, hey, this is the average volatility, okay, or this is or even say here's the average volatility, and this stock is 2.5 times its average volatility. And usually options track this right now. Now, this is not an exact example, but most brokerages, they have this type of thing for implied volatility where they strip. Do you guys remember I showed you yesterday this pie chart, right? It's a pie chart. And I said the only thing we can't ascertain is the implied volatility. Implied volatility is ascertained by the market in real time. Implied volatility goes like this. Like imagine a ball going expanding and contracting in real time. As buyers, as greed comes into that stock, it gets smaller. As fear comes into that stock, it gets bigger. Okay, so all day long, that implied volatility, whatever stock it is, the implied volatility is doing this. Most of the others are pretty they're, the slices are of that pizza are pretty straight, but implied volatility can take over that entire slice 5 times over. That's what I was trying to explain to you guys yesterday. Okay? Very, 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 very important. Okay? Really, 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 really important to understand. So, don't underestimate the impact of implied volatility and what that can have on your option. Well, Roger, that doesn't mean anything to me. I don't care. I'm an income trader, and what I do is this. Let me show you something. And I sell options all the way up. I sell options where the stock will never go. Well, here's the problem with that. Let's say you do that, okay? And let's say you're right, the stock won't go there. But let's hypothetically look at a scenario. Let's say you sold an option here for 30 cents and your risk is $5, okay? Yeah, I know. The odds of the stock going from here down to here is like 5%. But if you lose your ass, you're going to have to make 20 of those trades to make money, which is 20 trades is 100% right there. So walking up the stairs and falling down. But here's the bigger problem. And this is I'm being facetious because never say never, never, ever, ever applies to trading. I was telling Matt, Murphy's Law never works when it comes to money, relationships, education, or trading. Am I wrong in saying that? And I think anybody over 50 would be like, yeah, he's 100% right. I mean, can you count Murphy's Law when it comes to relationship, money, love, friends, or trading? If you rely on Murphy's Law, you're not going to get very far, right? Come on. We've all been there, right? Right? See, Glenn's like, you're right on, Roger. I mean, Murphy's Law, of course, never say never, because you know it's going to happen. Of course it's going to happen. Tick all the time. Trin, I don't look at Trin, but I do look at Tick all the time. I have it right on my screen right now. When it comes to trading, business, personal life, and school or work, Murphy's Law never fails. Okay? So if we all take that with if you expect something different in life, you're going to be disappointed. So, but here's the thing. Here's what I wanted to share with you. So tell me if you've ever done this before. You sell an option here, right? And the stock doesn't go down there. Oh, no. But it starts to go down there. And your option that was worth 35 cents, oh, don't worry, you have 5 days till expiration. But the price starts going down and down and down. It hasn't got to your price yet, but that 30-cent option now costs $6. Has that ever happened to you? So yeah. If it doesn't get all the way there, yeah, you'll be okay. But if not, you have to now make up 20 trades. See? Now you have to be right 20 trades versus selling an option right here, right? Selling an option right here where the price hardly ever goes. And if the price doesn't go there, you make 70%. You make 4 times as much as you would have made right here. And if you lose 50%, and your win rate is 80%. Vladimir says, oh, yes. See, so it's not just selling the cheap option and not getting hit. It's the, oh my God, I almost got hit. Because I'm telling you, when this thing goes down to here, and you know Murphy's Law never fails, you all know that. That option, it's going to start, that 30-cent option is going to be worth $3. And you're not going to be sleeping at night, which is why I don't trade that way, which is why I stopped trading that way. Because I realized, why do that if I don't have to? How many corrections happen in a year? It's not the corrections, Raymond. Remember, it's an individual stock. So it's not a correction. We don't know how many corrections will happen in a year. It's unpredictable because we can't predict the reason for the correction. Number two, stocks are not individual stocks. Think about this. It's a good question. And that brings up another good point. You're way more susceptible, Raymond. And here's why. Another stock how many stocks do you let AVGO, how many stocks do you have in semiconductors? Do you remember I told you that some industries and some sectors are extremely related to each other? Okay. Remember I told you that semiconductor stocks are extremely related to each other? So now your stock is dependent on 30 stocks. What if one of them has bad deliveries? What if one of them has earnings? Do you see the problem? You're becoming vulnerable. Now, if you sell options on the market, okay, you're right. Maybe 4 times a year. But when you have an option on an individual stock, anything can happen. Then you got it because the stock is susceptible to markets, and the stock is susceptible to the sectors, and the stock is susceptible to its individual stocks. Do you see the problem, Raymond? I'm just trying to give you a real answer, not some, statistically it happens 3 times. No, I understand where you're going. Oh, how about somebody else just mentioned it? How about, Matt is getting frisky here. Look at that. Good timing, too. I like the timing. Good timing. How about, let me give you another example. Raymond, something else. Dave Larch, you just brought something that you gave me next week. Next week is a big Fed week. Let's say you're doing bank stocks. The reason I'm bringing this up is because I like a few bank stocks. Don't you think next week's the banks are going to be impacted by the Fed? So how about the Fed? JP Morgan, exactly, Rosalina. That's one of the ones I'm looking at, by the way. So you can have a stock. You know how sometimes we see a stock that I say don't touch these stocks because they're doing this? Well, a lot of those, guess what stocks have the most overvalued options? Stock that are doing this. See how it all ties in together? So what's the best way to do it? The best way to do it if you're going to do income strategies is take a little piece of the actual meat. Take a little part of the implied volatility, and then you don't have to worry about take a little piece of intrinsic value, and then you don't have to worry as much about implied volatility. And then you let decay take its course, and let price action take its course, and don't rely so much on what could potentially not happen. Because I'm telling you, there's how many people here? We got about 500 people, 550, 60. We got a total of 600 people here. How many times have you been clipped by the easy making money easily, quote unquote, by doing far out of the money credit spreads and taking pennies on the money, and then having to get out of that position because it ballooned 20 times against you, even if it didn't clip you? A lot of you, margin calls, this, that, your broker, you were nervous. It happens all the time. Mike says, I own FedEx right now because of what you're saying. Bingo. And the market oh yeah, Robert. Oh, Robert is so right. I see that Mike and Robert have been there a few times. Folks, what I'm talking about is not a once in a lifetime occurrence. It happens all the time. Once in 20 trades. So if you're one of those folks that takes 5% on a trade, guess what? You can win 19 times, and the 20th time you'll be clipped. Matt, based on your experience, am I underselling it or am I overselling it?
No, you're underselling it.
I'm underselling it. I'm not even. So don't do that. So let me show you an alternative. And I was showing this yesterday. And again, I'm going to have a class on this, but first let me show you some of these trades that I like. So let me just kind of look at my watch list. While I do this, I'm going to kill two birds with one stone by, hold on, by going through my watch list. How about that? Okay. That way we can eliminate some, look at some. So another lesson. Where sounds like me? It sounds like me in the pit. Now, Sean, how would that be anything like the pit? Have we ever done one credit spread in the pit? So what does the pit have to do with what we're talking about right now? I've noticed that you do this all the time. You bring in something that's completely irrelevant to the conversation into the conversation. All right. You mentioned the program that has absolutely nothing to do in its wildest dreams to what we're talking about right now. All right. Kevin says just sold AVGO put spread for 27 cents. We're talking about AVGO. He sold a put spread. That's relevant. All right. Omar says, I have a question. How do I protect my trades from a drop in the ATR? If the ATR was high when I traded the option and the ATR volume drops, making money on my trade becomes difficult. Well, that's a good point, but also you have to adjust your position size. It's not. You see, Omar. Here's the thing. I'll give you a really good example. We were in a trade HIMS. Matt, remember HIMS? So we got into HIMS right here, okay? And actually, no, we got into HIMS right here. I don't want to lie to you. All right? Okay. Right here. So implied volatility, ATR was really high over here, right? And here ATR got lowered. Now, if you're talking about options, are you talking about when traded? Okay, so what you're talking about, you're having decay. The way you do that is debit spreads, Omar. Debit spreads. Okay, so I'm going to teach you this right now. If you're buying options, not selling spreads, if you're buying options, and you want to buy an option, but implied volatility is high, what you do, Omar, is you do a debit spread. You buy the regular options when implied volatility is low, but you want to buy options when implied volatility is high. You want to do a debit spread. More importantly, you want to do a near-term debit spread. A near-term debit spread. Well, wait a minute, Roger. Whoa, hold on. Stop everything. You always say to do 3 to 4 weeks out. Are you changing the script on me? No, I'm not. Let me explain why you want to do a near-term debit spread. You want to do a near-term debit spread because implied volatility is much, 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 much higher on the option that you're going to sell versus the option that you're going to buy. And that gives you a major edge. So, well, Roger, what if it expires? But you didn't pay very much. You bought a spread that expires 3-4 days out. You just buy another one. But instead of buying a call 3 weeks out that expires in 3 weeks for $5, maybe you spend $1 on that spread. Michael has a good point. What is near term? Let me show you what near term is. Yeah, I don't mind questions, but like relevant, not something that's totally, completely out of left field and irrelevant. Okay. So here. Yeah, I don't know who that is, but 99, I haven't seen anybody do it the way I do it, Vincent. Maybe because they don't actually do it. All right. So right here, 7 days out. The general rule of thumb is, you know how I tell you guys if you're day trading, if you're day trading in the pit, to go 4 to 7 days out, 4 to 8 days out, and if you're swing trading, go 3 to 4 weeks out. Same principle. 7 days out right here. So in this case here, just to show you, and I have no intention of doing anything on HIMS right now, but right here. Okay, thanks, Bugs. Right here, you can do you would start at a delta of 0.50, and you could do a 58 or 59. If you do this one, you have to pay 50 cents. If you do this one, you have to pay $1. But Omar, here's the point. This transaction would cost you 50 cents, and you could make 100% return on it. If it doesn't go your way, you can buy another one for 50 cents and make 100% return on it. Look at the value of this option versus this option, because implied volatility is really, really high. Okay, now. See, I answer questions. I'm a nice guy. I don't mess around. Now, let's look at the other scenario. Let's say we go 3 weeks out and we do a delta 70. You're paying about $7.65, $8. How many spreads can you do? How many of those spreads can you do for 50 cents versus $8? Omar. Capiche? Does everybody understand where I'm going with this? Doesn't work, you just do next week's. Thank you, Omar. That's a guy that's making $300,000 a month asking me a very good question. You're welcome, Kevin. So, is it possible to give a cheat sheet? What options considered high? I told you, John, there isn't, because you see, here's the problem, John. Here's the problem. Every option has an intrinsic different implied volatility. You know how some stocks move a lot every day and some stocks move a little every day? Options, that's what drives options. So what you need to find out is what the baseline is. And the baseline is the historic volatility. See, the historic volatility will have an average, and every brokerage has it. What is delta? Delta MZGR. I'm sorry, I can't pronounce your name. I apologize. Delta is the sensitivity of the option to the underlying asset, which means for every dollar the stock moves, how much will the option move? So if a delta has a sensitivity of 0.50, it has 50 cents for every dollar. Marlon says Omar may already know the answer, but is trying to help us out. I don't think so. I think he was genuinely asking the question. He's pretty new at this, Marlon. Omar hasn't been doing this all this time. He's genuinely learning. And Omar, if I'm saying anything wrong, please correct me. But I think he genuinely asked the question because he wanted to know the answer. Anyways, so now, but. So Omar says correct. Okay, so yeah, add the money debit spreads are a great tool when the option's too expensive, when you don't want to go 3 weeks out, when you want a cheapie, and you can have a good way of making a lot of money. Okay, it's just another way to skin the cat. Can you briefly explain the difference between IV rank and IV percentile? Let me ask you a question, Christian. I'm going to ask you a question, and if you have a question, if you can answer this question, then I'll answer your question. How would that help us make more money and become better traders? How would knowing the difference between IV rank and IV percentile help us make more money and become better traders? Can you answer that question for me? If you can answer that question, Christian, I'll spend 20 minutes explaining it to you. But I know the answer to that question. The answer to that question is it won't. Can we talk about things that will actually help you put money in your pocket? Because I have not looked at the last time I looked at IV rank. No. Don't be sorry. You brought up a great point. The last time I looked at IV percentile versus IV rank was probably 25 years ago. And the next time I'm going to look at it will be in another 25 years. Point is, it doesn't make a difference. I don't look at it, why do you need to look at it? There's already too many things to look at. Too many things being thrown at you. Hey, James, good to have you. Welcome. You don't need to worry about that. If it doesn't help, remember what I said to you guys. I made a promise to you a long time ago, about 2.5 years ago. I made a promise, and I said, I'm going to only focus on things that move the needle, the 5% that moves the needle. All the other stuff, I'll let other gurus talk about. I'm only going to give you the stuff that moves the needles. Okay? So what I look at is I look at the current implied volatility compared to historic volatility. And I look at how high the historic volatility is compared to the implied volatility. Just like would be looking at the Bollinger width, I would look at what the baseline is and I would compare to where it is right now. Exactly. Because you can go down that rabbit hole with implied vol. If you guys are interested in all of that, I have a great book recommendation for you. Knock yourself out. This will explain everything you ever wanted to know. Right here. Just remember the story I shared with you in the beginning of this. And they have a lot of components. That's why I like to keep it simple. Exactly. Nice and easy. Nice and easy and simple. So, without any further ado, let's look at some of the stocks that I'm looking at right now, and let's see if we can put an option spread on them, okay? Or most importantly, if we can't, which will be the case for most of them, why not? That's where you learn, okay? That's where you learn. Okay, all right. Oh, I feel bad for Matt. He's like riding this Bronco on this S&P for the last 2 Oh, Matt, are you falling asleep yet?
Nope. Quite
All
the
right.
opposite.
All right, just getting going, huh?
Yep.
All right. No revenge trading, remember that.
Mm-hmm.
All right. All right. So beautiful stock, right? Beautiful pattern. A little choppy, but very, very nice. Earnings in a few days. So we obviously can't write options on this because we write options a few weeks out and that's just not enough time. And let's see if liquidity is beautiful on these. Several of us are writing that Bronco. Of course, of course. I mean, he's physically, like you could see him. He's looking at it right now. That's right, Richard. Things that go up eventually go back to the VWAP, especially with the divergence in the volt. No, these are definitely not liquid. So if you wanted to buy this stock, God bless, right here. Great looking stock to buy, but I wouldn't be doing any income spreads on it. Too spready. And earnings. Nice intraday chart too. I'm going to set a VWAP alert. You never know how things go, how the balls bounce. There we go. Just for one day. All right. I have a lot of alerts, but I only set them for one day and then they just reset. Unless I'm looking for a VWAP, then I set it for a week. Okay, JP Morgan, they already had earnings. They're not that far from the VWAP. Look at this. Look at this. We do have financial stuff next week. Spreads are... they're not that good. Not A+. All right. There you guys. Newmont Mining, another stock on my list. And again, this is just stocks that I'm looking at to go long right now. So I'm just seeing if there would be, I got sidetracked as I always do. Sometimes a good time to do income spreads, the way I do them, is when you believed you have grinders and like this is a grinder. This is not a grinder right now. That's a breakout, but this is a grinder. Sometimes when you have a grinder and you expect this, Microsoft is a perfect example of a grinder. This is a beautiful grinder. I probably would do it if it wasn't for earnings. This is a grinder right here. When you have a grinder, you're not looking for a huge pop. You're just expecting it to grind up a little bit. The spreads that I'm talking about, what we're going to be having the class on in a few minutes, they work really well on grinders. Okay? Because you don't need a huge move to make money on, and they're relatively safe. Yeah, I like grinders too. Remember when GE was a grinder like a year and a half ago? We kept just trading it all the time. All the time. Matt, can you post the link in the YouTube channel we're gonna have folks. If you're in the YouTube channel, it's a great idea for you to move your buns to the Zoom room. Okay, just heads up. Okay, heads up. Okay, let's continue. So Microsoft is great, but it's got earnings literally in a few days. And honestly, I would love to do it on Microsoft, but I didn't even put it on my list. I just wanted to give you an example of a grinder. AMD. Okay, AMD's got earnings also in I want to give it at least 2 weeks. So not just playing with danger, taking unnecessary risk. Great stock, a little overbought. I'm going to set an alert at the VWAP. Crossing up. Yeah, right there. 1 week. Credit spreads with puts on grinders, grinding meaning going up, would work. Let's Oracle, yeah, let's take a look, George. Oh, Oracle looks beautiful. George, we got to start hanging out more often. Yeah, Oracle does look beautiful, and it doesn't have earnings for a while. Okay, let's look at the options. Let's see, let's go. They're not that great. Could be a little better. Remember I said you need really good options. You need really tight spreads. So let's just take a look. 15-day 235. Yeah, way too much risk. Way too much. See, look, we're risking $5, right? So I want to take somewhere around 250, right? And this is only going to give me about $1.25. So, and the spread, not that great. Not that great. Not that great. And here, okay, here we got, this looks better. This looks better. Here we got $2.50 risk, and we could take almost $1. So you see how we're starting, see what I'm looking for? I'm looking for somewhere around the 50%. Because why? Remember I told you yesterday, if all hell breaks loose, I don't want to lose 400%. I want to lose 50% because you're going to keep the premium no matter what. Okay? So I'm just letting you understand how I work. And if Oracle continues moving higher, and Oracle looks beautiful right now, as a matter of fact, I'm going to add it on my watch list. Thanks for, who was it that gave it to me? I mean, I've been looking at it all week. I don't know why I didn't look at it today. George, thank you, George. I appreciate that. Oracle, I'm going to add it on my list. I don't know why I wasn't looking. I'm a little brain dead today. IBIT, let's look. IBIT, no. No. I want a stock that's doing this, not falling down.
Not the Bitcoin spot ETF.
It is. Let's continue down our path. Dell, which I have already a VWAP alert, a little overdone. But the spreads look, we would be able to work with these spreads a little bit. Okay. A little overdone to the upside. Palantir. I know you loved the profits on the Palantir today. Spreads are fantastic. These are the kind of spreads we want. See? But it's a little too much. And earnings in a few days. Double whammy there. Roblox. Roblox looks good. What about spreads? Nah. Do you remember now, I don't know if you remember yesterday during the webinar, I told you that 8 out of 10 that I look for do not work. 8 out of 10. 8 out of 10 do not work. When I'm looking at a straight option, 8 out of 10 will work. But if any of the ones we just looked at would be perfect if I was just buying an option. But if I'm doing a two-sided option, do you see how much more pickier I am with the liquidity and the spreads? So 8 to 9 out of 10 will not work. So it's not just me finding the right stock, it's me finding the right blend between the right stock, the right ratio, the stock has to look pretty. And I'm not going to go into details of that now because we do it every day. The stock has to look pretty. The spread has to be real tight. And we have to, and I need to get roughly 40 to 60% risk to reward. So I'll just do a few more for you, but I want to do the class so you could see exactly how we do it in case you guys missed it yesterday. Schwab was on my, no, a little overdone. GE was on my list. A little spready. To be honest with you, I'm surprised that these stocks are so spready. You want me to look at Uber? Okay. Uber's not ready yet. No. Okay. All right. So, folks, I looked. CG, I'll take a look at CG. Nice looking stock, a little too deviated. I'm going to set an alert on it to the 8-day EMA though. And we'll give it a week. Shorts, I don't want to look at shorts when markets are making all-time highs right now, Greg. Also, implied volatility is not really favoring, and I'm talking about natural implied volatility. It's not really favoring. I don't think I want to. I don't think I want to go that route. VRT, I could take a look at VRT real quick, and then I want to start this. You guys are picking good stocks, but let's look at options. No, still a little spready. These are puts. No, no, no. All right, all right. Now, I'm going to do a class right now. This is live. They wanted me to just do a replay because we don't have a lot of spots left. So when there's not a lot of spots left, they're like, Roger, just do a replay. I'm like, no, you know what? I want to do it live because I love doing this class and I want to teach you guys this. Now, the concepts that I've been talking about for the last 55 minutes, I'm going to put them together for you right now, okay? And show you the way traditional traders do income trades and how I do income trades, okay? So you guys could see the difference for yourself. Matt, go ahead and close up. Folks, if you're on YouTube, not Zoom, if you're on YouTube, it's time to move into the Zoom room, okay? Time to move into the Zoom room. And I actually want to have a little time today to find you guys another trade because we closed out AVGO at a nice profit, at like 25% profit. We only had it for a few days. And it's time to do another trade. And I love to try to get the DK over the weekend. So I need to find the trade. I'm a little hampered right now because we're in the middle of earnings seasons, but I'm going to try to do it for you. So since revamping the strategy, our win rate has actually been better. It's about 80%, and our winner losers combined have been better than 5%. And we're going to show you the average payout, which is $1,485 for $5,000, not 2